First of all, the psychology of trading is really important. Anybody can hit buy buttons and short buttons. It's what you do when you get into a trade. Number one secret is to have a plan when you get into a trade. Ask yourself the question, why am I buying or shorting this stock? Not because Uncle Herbie on the internet told me to, or not because some signal service told me to. You've got to do your homework. You've got to use price action and technical analysis. Everybody should have their graphs set up with whatever technical analysis they use. Exponential moving averages, pivot points, RSI, support and resistance. There's lots of things that you can use to set up your charts. If you want to know more about this, we happily tell you about it. But you need to use technical analysis and price action. The rule number one is every order that you enter, you must. I'm not a financial advisor. I'm giving you secrets of successful day trading. Every time you get into a trade, you must use a stop order. The stock market gives you this incredible gift to be able to identify your downside risk. Everybody knows what a stop order is. Have a stop order on every trade, okay? You put in an order to buy stock at 50, have a stop order at 49.5. You put in order to short it at $70, have a stop order in to protect your downside risk, okay? That's number two. Number three is if you're trading and you're having a bad day and you have one losing trade, two losing trades, or three losing trades, you stop trading, okay? You stop trading. You're having a bad day. Doesn't mean you're a bad trader. Doesn't mean you're a loser. You will come back from a bad day. You'll come back from a bad week, but you will not come back from revenge trading. Very often when people are day trading and they're losing money, they got to go back in to get that money back, and they do things that are really irresponsible and silly. They trade, they increase their size, they trade more money, they get irresponsible, they don't use stop orders, and they will turn a small loss into a much larger loss. If you have three losers, turn the machine off and go home. Go to the beach, go get a beer, forget about it. Walk away from the day. You're having a bad day, you'll come back from that. Next thing, that's number three. Number four is when you get into a trade and the trade is working for you and you make 50 cents or $1, start taking profits immediately, okay? Put a little money in the bank. And then you raise your stop order up to break even so that you can never lose money on this trade. Imagine if I buy 100 shares at 50, I have a stop order at 49.5. The stock goes to 50.5. I sell half of my position. I raise my stop order up to 50. Now I've made 50 cents and I cannot lose money on the trade. The psychological effects of trading with money in the bank and knowing you can't lose money is an amazing thing. It will help you build confidence. It will help you learn how to trade better. So you never turn a winning trade into a losing trade. That's the psychology behind it. You're in a trade, it works, start taking profits, move your stop up, and you're locking in at least break even, or you're locking in a profit. That's number four. And once again, the last thing is never turn a winning day into a losing day. Have a target amount of money you want to make. If you're a 100-share trader, your target should be $100. If you're a 1,000-share trader, your target should be $1,000. If you are trading and you hit your goal, turn the machine off and go home. Go to the beach, take your family out to dinner. Whatever you need to do, but don't overtrade, okay? If you hit your limit, if you hit your target, turn the machine off and go home. That's the best it's going to get.